Both crypto tokens and related stocks are staging a comeback in 2023 after the worst of the crypto winter. As of December 20th, Bitcoin has more than doubled so far this year, rising around 160%. Ether climbed more than 80% in the same time, on pace for its best year since 2021. Meanwhile, crypto companies have rallied too. MicroStrategy has more than quadrupled this year, and crypto miners Riot and Marathon Digital have soared 385% and 546% respectively.
There's kind of the narrative, which is buy Bitcoin and chill, right? Just let the best performing asset of all time compound over a long period of time. It's a finite asset. More capital is going to flow in. The price will go up given enough time. On the other hand, there's people who say, look, I don't want just kind of the beta exposure to the market, right? I want to be able to have some sort of outperformance. And so they'll use leverage, they'll buy equities, they'll do all sorts of different things. But if you take more risk, you better get a higher return.
2023's performance is just one part of the picture, and overall, not every company or cryptocurrency is doing quite so well. Take Coinbase. It's one of the biggest crypto players traded on Wall Street, and it's up more than 350% this year. But over the last couple of years, the company's stock has struggled.
We have an underperform rating on Coinbase. One of the reasons is the legal and regulatory environment is pretty unsettled. Right now, the SEC initiated a lawsuit against Coinbase back in early June, and the outcome of that remains to be seen. We also think that it's going to be challenging for Coinbase to diversify its sources of revenue beyond its core business, which is largely tied to retail trading.
Since Coinbase went public in April 2021, shares have plunged more than 35% as of December 20th. In that same time frame, Bitcoin tumbled 27%, while Ether actually rose more than 2%.
These companies are a proxy. They are going to move directionally the same as Bitcoin, but not precisely the same. And while they fell a lot more over the last 2 years, they also grew more in the good years. The reason the prices fell so much is because they had risen much higher in the first place. So you're getting the best in both. You can't have it both ways. You can't get both higher return and lower risk. Those are on a seesaw. You're going to get a lot of one, you're going to get a lot of the other.
And of course, for most investors, the big question is, which strategy is going to make the most money with the least risk? In 2024, both the assets and crypto-focused companies face big catalysts and major headwinds that could influence investor returns. Bitcoin is the dominant cryptocurrency. That's likely to continue in 2024. And there's a major event coming in the year ahead that could drive prices: the halving. The key technical event takes place every 4 years and reduces rewards for successfully mining new Bitcoin by half. The goal? To reduce the supply of Bitcoin over time. Before the last halving in 2020, the price of Bitcoin increased by 19% from the same day a year earlier.
When you look at these market cycles, historically they've been kind of 4-year market cycles in between these Bitcoin halvings. And so usually what will end up happening is you'll get about 2.5 to 3 years from the bottom of the last bear market to the top of the next bull market. And then you'll get about a year and a half market correction. And so historically there's been hundreds of percent up, and then you get about an 80% drawdown.
Bitcoin isn't the only one likely to benefit from the halving either. In a recent report, Bernstein says it expects Bitcoin miners in particular to outperform the broader market going forward, thanks in large part to the halving event. Bernstein argues the cut to mining rewards will likely drive consolidation among miners, as lower payouts mean the more efficient firms will make more money.
What we're seeing when it comes to Bitcoin miners is in 2023, they have been the better asset to have allocated to. Now, the question becomes, will that remain over a long period of time?
Miners aren't the only crypto companies facing stiffer competition. Coinbase, Robinhood, and similar firms felt the pressure in 2023 as crypto trading volume plummeted and transaction revenue dried up. In 2024, crypto businesses will have to prove their staying power.
In my view, there's very little scenario where the businesses themselves succeed, but the tokens themselves fail. If Bitcoin and ETH disappeared from the world tomorrow, is that business going to be successful? I would argue probably not. Could, but unlikely. Versus, there's a high chance that the business doesn't succeed, competition, someone else replaces them, margins compressed, but the tokens themselves are fine. The business goes away, Bitcoin and ETH are still around in 2025 or 2030.
One major challenge still lies ahead for both crypto assets and crypto companies alike: regulation.
In the United States, I think that Coinbase and other companies like it have understandably expressed some frustration with the lack of regulatory clarity that we've seen coming out of the U.S. government. Which agency is going to be responsible? What are the rules going to be?
The industry has pushed for clearer rules, but none have made it past the early stages in Congress so far. And regulators like the SEC are still cracking down on crypto with enforcement action. That's unlikely to slow in 2024.
I think we are going to continue to see active investigation and pursuit of crypto companies that are operating outside of the guidelines. I think in some cases, like for Kraken, it was very hard for them to know how to register and what the guidelines are. And we've seen even Coinbase have a similar issue in the past, and they put more effort towards regulatory compliance probably than anyone. I mean, I think that the more companies that are forced to come into compliance, the better. And, I think most companies are going to do everything they can to comply. And I think that the SEC and the lawmakers and the CFTC can all make this a lot easier by being very, very clear on what those rules are.
Now, there's also the potential for an all-new crypto investment strategy coming in 2024 in the form of spot Bitcoin and Ether ETFs. If approved, spot crypto ETFs would let Wall Street players buy into digital assets through a regulated exchange. That could drive up the price of Bitcoin and Ether. Major crypto companies could benefit too, as they help the ETFs operate.
If they are approved, Coinbase is expected to have a custodial role with at least some of those ETFs, which in and of itself would be a positive. It would mean some incremental revenue for them. However, ETFs could certainly represent a form of competition because an individual investor in particular might say, well, I could just buy an ETF through my existing broker and own Bitcoin that way rather than having to open an account at Coinbase to actually buy and sell Bitcoin.
Coinbase has an important role to play here. We've been named as the custodian in many of these ETF applications. And our view is that it's going to be really good. It's going to bring in new sources of capital into the crypto ecosystem. That's going to be good for crypto, but it's also going to be good for Coinbase.
Speaking with CNBC in September, Coinbase CEO Brian Armstrong also addressed the potential for more competition for Coinbase if those spot crypto ETFs get approved.
We haven't seen any margin compression yet, and our general view is that we want to grow the size of the pie. So we want crypto to be integrated into every traditional financial service firm. We want it to be integrated into every fintech out there. We want it to be integrated into new types of wallets, Web3 that's just coming on the scene. So I don't view it as competitive. Coinbase has really incredible infrastructure that we're going to be able to power a lot of these things to have a piece of the pie. But the most important thing is we got to grow the size of the pie.
So with so much news driving the crypto industry in 2024, what's the game plan for investors? Well, some experts say it might be less about one investment over another and more about investing across a wide range of assets.
What a lot of people choose is diversification. In other words, instead of trying to make a bet as to which approach is better, do a little bit of everything. This way, you are protecting yourself by not making a single bad bet. You'll be directionally correct. Own a little bit of Bitcoin, a little bit of the Bitcoin ETF, a little bit of these crypto stocks. If you're doing it in that fashion, no one thing will hurt you, and you'll be directionally doing well along with the rest of crypto.